Welcome back. You're watching The Money Show on ET Now. There were several bad phases of 2019 and the decade as well gone by. One of them was real estate. We did see several projects get stuck, and not just that, property prices have been stagnant as ever. In fact, if you look at metro cities, the price at which, let's say, a piece of land at Cuff Parade was trading at, or rather was valued at 10 years ago, is roughly the same even today. So there's been minimalist appreciation in the decade gone by in real estate, and of course in the year gone by as well. It's been inundated with inventory problems, pricing again flatlining, among other things. So what exactly is it then that we should keep our eyes out on for 2020, especially as builders as well have been giving out all kinds of discounts? The Prime Minister as well has been focusing big time on affordable housing, among other things. Prashant Thakur, the Director and Head of Research with ANAROCK, joins us now on the show. Hi Prashant, good evening. Would you say that the things that I said about the real estate market, however moribund they may sound, but they've unfortunately been true?
I think, Movina, you summarized it quite well. The last decade and particularly the last couple of years have been really kind of the real estate has gone through a structural change. So I would say that the real estate has been slowly moving towards from unorganized sector to more of a formalized and organized sector. And in the process, it is going through a huge amount of consolidation. So let me take you, a couple of years back how this industry was, so that we can relate that how this 2020 is going to look like for the real estate. So inherently the Indian real estate, residential real estate to be particular, is supposed to be end user driven, because India has a natural demand for housing because of housing shortage that we have been witnessing. But what happened unfortunately in the last decade, and especially in the last 5-6 years, this market was dominated more by speculators, and we all know that when the market is dominated by speculators, there is a lot of value destruction. Investors are good for market because they are kind of market maker and they bring in long-term value, but speculators drive the price to a certain extent where it is termed as a bubble, and that's exactly what happened with Indian residential real estate. As a result, we saw a lot of unsold inventory piling up, projects not being completed on time, and in the process everybody was suffering, right from the end user, right from even the investors and the financial institutions. And then we saw huge amount of reforms that came in terms of RERA, GST, Benami. And that led to a huge transformation in terms of this sector being more accountable, more transparent. And unfortunately, what happened when this industry was coping with such kind of structural reform, we saw the unfortunate incidents of IL&FS crisis, which led to a liquidity freeze. Now, in this backdrop, I think government had done its fair bit in terms of announcing liquidity relief for the housing finance sector, and NBFCs kind of rolling out a stress fund to the tune of 25,000 crores. So how does 2020 looks in this backdrop? So I would say that this year is going to be a defining year for the entire ecosystem, where I would say men's will be separated from boys. We need to see how the impact of stress fund is seen on the ground. There are a lot of fine lines that needs to be studied before we see the impact on the stalled projects. Now you will see a lot of consolidation happening. In this background, I think the beneficiary would be the end users. So we'll see a lot of stuck projects getting completed, a lot of homeowners who have been waiting for the possession getting the completion. But the downside of this would be for investors who have invested in terms of just looking at price appreciation. As you rightly said that in 2019 compared to 2018, there was hardly any price appreciation. Now look at a scenario where in 2020 a lot of stocks will be completed because of the stress fund that government has announced, plus a lot of stock coming in the affordable segment. There will be good amount of supply and there will be a limited upside for the price appreciation. So I would say that 2020, if a person is looking to buy a house for its end use, I think that would be the right time to buy, because your interest rates are all-time low. and then you have ample amount of stocks to pick, and now you have some amount of certainty about the project getting completed, rather than staring at a scenario where the developer would continuously keep on shifting the completion date. And as for the investors, I think if I'm a patient long-term investor, I think there's still a scope to make money, because the real estate lends a good amount of stability in your portfolio. So I would not say that this is a good year for investors, because as I said, 2020 would not see much of price appreciation, because there would be a lot of new supply coming in. And let me bring out one more point, that the projects that will be getting completed because of the stress fund coming in that there will be a lot of resales also happening, because not everybody would be would have brought that house for its end use. There would have been also some investors who would have got stuck in this stalled project. So once these projects are completed, you might see some kind of resale stock coming in the market that would be competing with the developer stock. So in a nutshell, there would be kind of a cap on upside in terms of price potential. But having said that, second half you would see some kind of revival. The key is, how does the economy performs? There's a complete freeze on consumption. The consumer sentiment is quite low.
The key takeaway, Prashant, that I also took from your previous answer,
that we saw in the
key takeaway that I also took from your previous answer is the fact that you should see a lot of stalled projects come to life. And I think that's been a key pain point, right? I think it may also be the reason why, like your report as well said, many people are staying away from real estate. Amrapali, JP, Unitech, among other things. So do you think that thanks to that stressed fund project and a lot of initiatives that the government is taking, can we expect these consumers to get the properties by next year, or do you think it'll take longer? And like you mentioned, if they're going to come back in the market for resale, don't you think that there'll be then more inventories in the market, which again in turn will cap prices?
Yeah. So in my opinion, first half we would see less of action, because still, lot of finer points are to be sorted out, and second half would be where the action would start. A lot of projects will start to get completed. But again, having said that, the stages at which these projects are stuck, I don't think that these stocks will get completed in 2020. It would take a couple of more years. I think the buyers will have to wait. But the good part is that government is quite serious about this stall projects, and this is managed by a third-party professional institute. So we would see some progress happening. So in my opinion, let's not hope that 2020 you will see that all the stall projects are seeing the light of the day. But couple of years down the line, we'll see the actual delivery started to happen. Now, coming back to the second point that you raised, yes, there would be a cap on the price appreciation, because there would be enough stock in the market, and I don't think the consumer sentiment would revive that much till the time these stocks get completed. And then even if the interest rates are quite low, I think the consumer sentiment needs to take a leap of faith, and that will happen only once they will start to see this stress fund actually getting functional, the delivery starting to happen. Because right now what they have seen is in the news, on the papers, but actually executions is yet to hit the ground.
Okay, all right. So finally, do you see that 2020 perhaps will see, would it be a better year for our viewers to go in and buy property for their consumption? Or will it, I mean, if they have spare cash, do you think it would be a good time to, put in money in property for investment purposes? Or should they just stay away right now and wait and watch?
No, so I would not say that you should stay away. First of all, if you're, as I've been mentioning, that if you're an end user, this is the best time to buy. And if you're an investor, I think what has happened in this industry over a period of time is that a lot of organized players are now dominating the market. So now you have clarity and certainty about the project completion. If you choose the right developer, right location, and you enter the market at a right price, I think there is, the scope of making money. But again, the catch is that earlier the price appreciation used to happen, on a year-to-year basis. You would have made money. You'll have to wait for at least 5 to 8 years if you really want to make money in real estate, residential to be precise.
So patience is a virtue, and I suppose that is something that all real estate investors will have to practice. Thanks a lot, Prashant, then, for summarizing 2019 for us and helping us just gaze the crystal ball a tad bit on what's in store for 2020 in 2020 for the real estate market. Okay, on that note, we'll wrap it up on this edition of the episode. Thank you so much for watching.